Back with countdown right here on Bloomberg Quinn. 26 minutes left for the markets to shut shop. Expiry week. Typically now, because there are 4 expiries, the last half an hour need not be necessarily very volatile. But as I say, or as I speak, it is turning out to be volatile. Led by the Nifty Bank, I must say. 300 points lower for the Nifty Bank. That's essentially the reason why there has been a sharp drop. So, yeah, I just spoke about it a moment too soon. Just quickly, before we talk about this, and maybe we'll get in our experts before we get into Yash Upadhyay, because there's a sharp drop there. Just see if the world markets are changing around a little bit here and there, or no. I think that side is okay. It's not too dramatic, so it's expiry-led moves that are happening right now. Quick thoughts out here, Hadrien, Mendonca. The Nifty Bank and the Nifty, both of them cracking in the last couple of minutes of trade.
Yeah, it is actually following what it has done in the past, 2 to 3 hours, since morning. After that, good move around the 11,797, if I'm not wrong, that was a top for intraday. Since then, the index has gradually been losing strength, and now if you see in the last hour also, again, it is on the move downward. So it is actually depicting and not changing or turning around on what it has been doing in the past 3 to 4 hours. So I think in the near term, I think this would continue going forward.
All right. Just stay on with us, gentlemen. We'll get in Mayuresh Joshi also in just a few moments, but it's time now to find out what has made it to Yash Upadhyay's list of Fab 4 stocks for the day. Yash, good afternoon.
Good afternoon, Devina. I'll start first with ICICI Prudential, and they came out with a decently good set of numbers. The stock was up about 2.5%. It is still holding on to those gains. They reported a premium growth of about 32% on a year-on-year basis. The management guidance too was positive, as they have indicated the doubling of their new business value over the next 3 to 4 years. So watch out for that. Aavas Financiers is up 5%, receiving its only second rating since more than 6 months of listing. ICICI Securities has come out with a report wherein they have recommended an addition add rating and have set a target price which indicates a potential upside of more than 12% from its current market price as well. Ultratech Cement rallies for a second straight day. It came out with an extremely good set of numbers yesterday. It rose close to 4.5% yesterday, and today as well it's up about 5%. We had a CLSA report wherein they have maintained the buy rating and have also hiked the target price on the counter, on the back of which we are seeing most of the cement names doing very well today. And lastly, we are also seeing some good up move for the sugar stocks. Berhampur Chini is up 3.5%, and it managed to hit a fresh 52-week high in today's day of trade as well of about 150 rupees. Volumes too coming in significantly higher for the counter.
All right, Yash, we'll leave it at that. Thank you so very much for that. That's the Fab 4 stocks of the day. Mayuresh Joshi of Angel Broking, he's joining us on the show this afternoon. Mayuresh, good afternoon to you. And since it's the most active pocket in today's session, let's talk a little bit more about cement. ACC disappointed. Ultratech completely surprised the street. It has been rewarded for its performance. A whole slew of other mid-cap cement counters is yet to report numbers. But is this going to be a turn of a quarter for cement space?
No, so as a space, Devina, I think it looks very, very attractive, as I've always maintained over the next 2 years. Now, I think it's going to be very, very stock specific at this point of time. So I think for the larger part of the cement industry as a whole, the expectations of additions, specifically in terms of new capacities getting added, whether you talk about clinker or the grinding capacities, is going to be to the tune of 12 to 14 million tons, where the demand is going to be around 27 to 30 million tons. So obviously, I think demand is improving at a very, very fast clip, which means that the utilization levels across this space is going to improve, creating the natural leverage on balance sheets. The second element obviously is the region-wise aspect that one really talks about. So I think a player like Ultratech has probably a pan-India presence also with the acquisitions that it has done. But I think a few companies, as I've always maintained, from the central part of the country, from the southern parts of the country, where I think the volume growth seems to be pretty reasonable, and the expectations of the EBITDA margins improving and the EBITDA per ton improving because of utilization levels moving up, because of input costs, as you witness, petcoke prices have gone down. I think this natural leverage will play out on balance sheets. And the third aspect obviously is the supportive policies which should support volume growth going forward. So infrastructure spending, rural-urban housing spending is obviously going to abet earnings in a significant manner going forward. So yes, I think I'm being very, very selective. A few companies might be a little bit expensive, but I think continue to hold on to stocks like an Ultratech, Heidelberg, India Cement and Ramco Cement in our portfolios.
Okay, that's constructive view coming in on Ultratech. ACC disappointed, but some chatter about valuation comfort there. The stocks bounced back after yesterday's fall, but right now it's off the day's high, sitting with gains of nearly 1%. Let's move on and address more earnings. Axis Bank may return to profits in the fourth quarter as its asset quality starts to stabilize. Shefali Malik is standing by with what's expected from the bank this time around. Shefali, over to you.
Strong set of earnings we're expecting from Axis Bank this time around, with profit of about 1630 crore rupees versus a loss of about 2188 in the same quarter last year. Even net interest income is expected to see a huge bump up this time around, with gains of about 23%, a strong business momentum with loan growth 16%, deposit growth 20%, and the margins are expected to remain stable at about 3.5%. We can expect strong growth in the retail and SME segment. In fact, management couple of days back, about a month back, highlighted to the analyst and even at their media meet that they are going to focus on accounts which are somewhere between SME and large corporates as well, accounts of about 1,000 crore rupees. So whether there is a huge amount of traction that has come in those accounts, it'll be interesting to see that. Other than that, asset quality is going to be one key highlight that we'll be looking forward to in their earnings, as the management has been guiding that their NPAs will improve going forward. So this time around, we look forward to slippages figure of about 2,400 to 3,000 odd crore rupees versus a figure of about 4,337 on a sequential basis and about 8,900 odd crore rupees on a YOY basis. Other than that, the numbers are expected to be largely stable and strong, in fact, this time around.
Thanks a lot, Shefali, for that. Let's see how the numbers pan out. And clearly, the NIM slippages and the asset quality once again will be in focus when it comes to the Axis Bank numbers. Mayuresh, if I could come to you, any specific expectations from the bank this time around?
Yes, I think a large element of what was discussed right now, I think the expectations of a 15-16% advances growth is not ruled out for the bank. The second element obviously is the stability in NIMs that one really looks at. So I think the expectations of NIMs probably staying in that 3.3-3.5% range is something that one really looks forward to, specifically in a scenario where you probably expect credit costs to start coming down and a gradual improvement probably being seen, both because of the resetting of the MCLR rates and lower interest reversals. The third element obviously is the asset quality, and as the bank has been prudent enough both to recognize the watch list quite aggressively over the past few quarters, and whatever has been left, specifically in terms of the corporate slippage book, I think a large element would have got recognized. So I would totally subscribe that the provisioning figure this time around might be lesser compared to what we've seen on a quarter-on-quarter and even on a year-on-year basis. The fourth element obviously is going to be the valuation stack up compared to the other banks at this point of time. And with retail advances growing at a very fast clip and the expectations of fee income growth, again being very, very granular for the bank and again very, very consistent enough as well, along with expectations of consistent NIMs and tapering down of credit costs, the ROE and the ROE exit rate that the bank is looking forward for can get achieved. The only caveat here would be the capital adequacy at around 12.8. So at some point of time over the next 2 to 3 quarters, there might be some need, in my opinion, to raise capital. But again, I think that should be accretive to the book and the bank itself from an earnings perspective. So again, I think stable numbers expected to get reported, but our positive view probably remains, and a clear disclaimer, we own this stock in our funds as well.
All right, that is Axis Bank. That's now down at the lowest point of the day ahead of its numbers. Tata Steel is the other one that reports its numbers today. The sales volumes may have jumped over 25% in the March quarter, but it's unlikely to reflect on the bottom line. Nikki Dwane is standing by to tell us why analysts expect a sharp fall in profits. Nikki.
Well, hi Devina. Top line, we're expecting a 21% growth out there for Tata Steel, but then that's expected to not percolate well down in the EBITDA performance. The margins are expected to shrink to as much as 15% as compared to 18% that we've seen in the corresponding quarter. In terms of the other parameters that we'd be watching out for, volume, as you just mentioned, the company has registered a growth of 25% in quarter 4 year-on-year basis consolidated level. Realization, however, we are expecting a downtake of as much as 3% on account of a weak pricing power. Apart from that, the steel prices actually a year-on-year basis have a decline, which in turn is expected to have bearing on the realization. EBITDA per ton typically is also expected to go down by 18% to a number of 10,500 rupees per ton. That's on consolidated basis. The company has delivered performance in terms of volume. India business 56% uptick. European business volumes have been flat. Southeast Asian business, the volume there have come down by 4.9%. That pretty much explains what kind of numbers that we're looking at on consolidated level. EBITDA per ton breakup, the three numbers that we like to watch out for: European business, which is expected to be lower by 30%. Bhushan Steel has already reported numbers. They were not good set of numbers, a 16% downtick there. And on standalone basis too, EBITDA per ton, we're expecting a 16% downtick. But essentially, what we like to watch out for, apart from earnings, will be the company's commentary on Thyssen Group supervisory, any kind of merger, because the latest report suggests that Thyssen Group supervisory board is expected to review a breakup of joint venture with Tata Steel. So any commentary coming in on those behalf would set the tone for the stock going forward in the trade. And apart from that, we'll also be looking at the volume outlook picture, given that the company is operating at an operating levels, utilization levels of around 90 to 95% plus. Back to you.
Thanks for that, Nikki. Thanks for putting that into perspective. Just before we get to what dealing rooms are recommending in the session today, I must say, after falling quite strongly, now kind of been steady at those levels. But if you look at the contributors list, Reliance Industries and HDFC must be right up there. The fall in Reliance has been pretty steep there on your screen. The top two contributors by points are Reliance as well as HDFC, and then HDFC Bank of course comes in, but these two have had the steepest fall in the last 30 odd minutes of trade. Good time to get a sense of what dealing rooms are recommending in the session today. Darshan and Yatin join in with their channel checks. Good afternoon both of you. Darshan, let's start with you first.
Yeah, so one of the stocks that's been actively spoken about is ICICI Prudential Life Insurance. It came out with its results, which was pretty much a mixed bag, but dealers indicate that the high possibility that the counter could come into the MSCI. Now remember, on 13th of next month is the MSCI inclusion list that will be announced, and probably another 15 days after that is where the inclusion will actually happen. So on that basis, dealers indicate that there is a potential inclusion in the MSCI. The other counter is Dr. Reddy, trading at a fresh 52-week high, coming in close to the 3,000 level. Dealers indicate that the momentum will continue. There is a lot of positive news that's happening and a lot of accumulation by some of the HNI. So there is accumulation. And the last one is Z Entertainment. It's flat in today's trade, but dealers indicate that at lower levels, some of the HNIs are actively accumulating. They believe that the deal which Subhash Chandra did speak about would take time, but they are of the opinion that the deal will come in much ahead than what the street is anticipating. But Yatin, what are you hearing?
Darshan, Tata Steel, that is one stock which will come out with earnings. It's a bit under pressure. Dealers are indicating that there are a lot of fresh shots which are getting built as far as this name is concerned in the future and option segment. However, we have cement counters which are quite strong in trade, including Ultratech and Shree Cement. Dealers are indicating that a lot of cement stocks are being bought by domestic funds, including the likes of Shree Cement, and that is expected to continue. Remember, yesterday we spoke about Ultratech Cement as to how dealers were accumulating positions. That stock gained yesterday 5%, another 5% in trade today for all of those names. And finally, BHEL, that is one stock wherein dealers, on the basis of FNO trends and technical trends, are recommending sell today, buy tomorrow kind of a strategy.
Okay, thanks. We'll watch out for some of these names as well. But of course, top of mind is what's happening to some of those large caps as they are falling right now. Pritesh, we spoke about the usual suspects, the Bharti Infratels and the commodity names. Between Reliance Industries and HDFC, both of which have fallen, which is looking weak, if at all either of them is looking weak?
I won't term the recent correction or decline from both the counter as it's a trend changer for the stocks. They have been traditionally the leaders in this market, and I think this rally in the market is going to last for quite a long time. Now let me just bring into the seasonality aspect of the index, so that will have a clear view. That will give a clear view of the index also, as well as these two heavyweight stocks. Now see, we have gone through the seasonality of the rallies in the month of March since 2009, and whenever Nifty in the month of March March gives a breakout move between 6 to 10%, the next month tends to be flat. And I think we are on the verge of repeating the same history. Currently, for the month, in last 4 weeks, we have seen a return of 0.1% on the index. So I think this market is going to be in a range bound. After a breakout move of 7% in the month of March, we are going to be in a range 11,500, 11,800. I think Reliance around, which is trading at 1360. I think that could be a dip, a move back to 13,1340 levels, and I think that would again give us an opportunity to buy back. So I think this kind of falls are a natural part of every trending move.
Okay, but we're still able to defend the 11,600 mark on Nifty. Let's see where the expiry comes about. But remember the moves that you've seen in the last few minutes of trade or half an hour of trade. It looks like it has been led by the expiry. It is led by the expiry. But there are a few stocks which are just moving around. We addressed Godrej Consumer already. It's down 3.5%. The other one is M&M Financials, though the numbers looked pretty much okay. But the stock since the morning session has been under pressure. It's down almost 3 to 3.5%. Mayuresh, if I could come to you, what did you make of the few numbers which have come from the financial space, be it India Bulls Housing Finance or M&M Financial? Did anything stood out according to you?
So, Navneet, again, I think the kind of disbursements that were expected to remain tepid, I think that was one of the reasons that was largely getting factored in at this point of time. The other element obviously was how the asset liability mismatch is panning out for a whole host of these players. So I think asset liability mismatch probably is not very, very evident as they're probably displayed from their presentations at least over the next few quarters. The third element obviously for a company like M&M Financial in particular, I think the asset quality pressure has come off significantly. So GNPA at 5.8%, you're probably seeing NPAs at 4.8%. I think that's a significant reduction that you're witnessing from asset quality perspective. The fourth element obviously is that the NIMs have got maintained around 8%. And the larger element here is their borrowing mix. So I think the dependence for a company like India Bulls Housing, for example, the CP dependence has just come down to 4%. Now it's an entire story that will get played out over the next few quarters on how disbursement growth can bounce back. And with expectations of capital adequacy remaining extremely strong for both these players, 19% for IIFL Finance at almost 70% in terms of tier 1 capital for M&M Financials. I think the balance sheet expansion from a disbursements perspective and qualitative disbursements are very much on the anvil. The element in terms of how earnings will play out is going to be a story in terms of disbursement growth, asset quality pressures coming off, and expectations of them being able to maintain their NIMs and spreads with a better quality borrowing profile, which they've probably successfully done. So I think better quality NBFCs, Navneet, in my opinion, should stand out. They might have got a little bit of a stick as far as the disbursement growth is concerned for this quarter, but in my opinion, it should bounce back very, very smartly over the next few quarters. So I think better quality and better rated NBFC with lesser leverage should stand out in markets.
4% down though for M&M Financial. Their SME disbursements also came off quite materially for M&M Financial. I think their vehicle financing business also. They're fairly large financiers to Maruti in rural India, and I presume with the results that Maruti has shown as well, that M&M Financial too has had some issues in being able to do that. Anyways, we'll talk about this at length over the course of the next few days as well. Maruti will remain a hot topic. For now, what is hot is trying to figure out what's the top closing strategy from both our experts, Hadrien as well as Pritesh. Hadrien, I'll come to you first. Your top closing strategy.
Yeah, I would go with Oberoi Realty. If you've noticed, the stock has corrected almost 15% in the past 2 weeks, and that kind of a fall is too large, and it is coming in a too short period of time. So I think again a clear mean reversion kind of a strategy that we are implying on Oberoi Realty. The fall has also got arrested around its 50-day moving average support area. So I think one can consider going long in Oberoi Realty around these levels. We are expecting a short-term target of 560. Keeping a very good stop loss at 518. So even the risk reward ratio is absolutely in favor of going long in Oberoi Realty currently.
All right, that's on Oberoi Realty. The other closing ideas, Pritesh, let's come to you.
I have a self-recommendation on Axis Bank. The stock is going to announce its earnings later on, later in the day. but looking at the way the charts are shaping up, I think there is a fall lurking around the corner. Back in the last week of March, the stock made a high of 788. It failed to sustain the midpoint of the current Gann channel, and thereafter it has been drifting lower. Currently, it is the last leg of the bullish butterfly pattern. Now, the last leg, which is obviously going to be downside, tends to be swift in nature. So we are going to see a sharp decline towards 700, 690, and maintaining a stop would be around 755.
Cap IT2 is not doing all that badly. Hexaware, for one, on its numbers is up 3.5%. Obviously, they are aided by the drop in the currency and the depreciation in the currency, but Mindtree is the other one, which is up 1.5%. That too, remember, it had announced that dividend of about 27 rupees per share. That was the total dividend. There was a special dividend, I think, of 20 rupees. That stock has moved up in the last few dying minutes of trade. And the other one is an Emphasis. Should pull that up two to see how that's been doing right now. Though Emphasis is not doing a whole lot much, it's down about 1.5%. But Mayuresh, for IT, we've seen the larger ones, Sans and HCL Tech. We're going to be watching out for HCL Tech. But the mid-cap IT pocket, and is there any great shakes expected this time?
So I think a large element of what we probably witnessed from the results so far, I think it is more or less in line with what the street was expecting. So I think the guidance also given by a few companies in terms of constant currency, in constant currency terms, I think that probably remains at par at this point of time. I think the beneficial factor that makes good quality IT companies stand out is their order book size and the kind of clientele that they probably service. So again, I've been maintaining the point that from $1 million to $10 million, I think a lot of large tier or mid-tier companies will probably not get into that. But I think servicing these clients, I think these companies are very well adapted to probably get these contracts on board as well as service them very, very effectively. The third element obviously is the digital part of the revenue, as I said earlier. That's increasing at a very fast clip, which probably gives the margin advantage. So I think specialized companies and specialized products, strokes, services should do well. I think a few companies have already had their moves, whether it's integration related, takeover related. But I'm being very, very selective in this space as well. So I think Nuclear Software is one mid-cap IT company that we continue holding in our portfolios, where I believe that there is tremendous value that can get accreted over the next few quarters and years.
Okay, there's some buying which is coming in the IT pack. Even something like TCS and Wipro, they've also bounced from their day's low. TCS is now sitting with minor gains, but they're all at day's high currently. Pritesh, if I could come to you and take a view on whether to execute a trade on Ultratech, which is touched its record high levels today, and Grasim, which is following the moves, considering it has 60% stake in Ultratech, which is better placed technically if somebody were to execute a fresh trade?
I think we should avoid both these counters. Now see, Ultratech in last 2 days it has rallied by 11%. But if you look at the larger picture from the day the market started rallying, it was on around the second week of Feb, the stock was trading around 3400. I'm talking about Ultratech, and currently it's trading around 4600. So I think we are talking about a massive rally in the stock, and right now the risk-reward ratio is not favorable to create longs. Same with Grasim. We had a strong move of 5% in today's trade, but I think to take a fresh long around these levels won't be the right approach.
Okay, let's start wrapping up the markets. Mayuresh, take a moment to thank you, of course, for joining in today and giving us your thoughts. Really appreciate your time today. And the markets ending, well, a bit wobbly. Yesterday, it was a day in the green. Today, it's not an equal reaction, but an opposite reaction for sure. Almost in the same vein. For the Nifty Bank, certainly in the same vein. 300 points down. We didn't quite expect it, but we got it on the expiry day. Mid caps and the small caps should also come up on your screen. Again, they didn't climb in the same way yesterday. They haven't fallen in the same way today. Maybe, just maybe, the breadth might be slightly more positive, at least at the broader end of the spectrum, than what the Nifty breadth would have been. But let me talk about the large caps, and then we'll, of course, talk about the mid caps and the small caps. The large cap session, no, this is not yesterday's price. Ultratech is up 5% yet again. So 2 days on a trot, it's arguably turning out to be the stock of the week at the large cap arena. Grasim follows suit, of course, naturally. So BPCL, 2-3 days of strong moves there for that one. There's strength in Bharti, there's strength in TCS and Wipro. So IT has seen some bit of buying in the session today. What about the losers? Bharti Infratel, unfortunately turning out to be the biggest casualty of the day. We were waiting for the Nifty numbers to start falling 10% post results. The numbers are okay, bad, but not so bad maybe, but something on the con call maybe spooked the street. Tata Steel down 3%, Vedanta 3%, JSW Steel 3%. So commodities have been taken to the cleaners today. Maruti Suzuki after the numbers, just about a 2% fall. Let's see if there's a further reaction tomorrow. And heavyweights like Reliance and HDFC too have corrected. But as I said, while the large caps have fallen so much, the market breadth for the market-wide positions might not be so bad because the mid caps and the small caps haven't fallen as much, Navneet.
That's right, Neeraj. There are a lot of movers in today's session on back of numbers, or there were some also F&O stocks which led the move. So starting off with Hexaware, which came out with its numbers during market hours yesterday. Revenues were in line, but definitely margins and PAT disappointed. But Macquarie today said it gave an outperform rating to this company and increased the target price also to 460. And clearly today, the day belonged to the cement pack. Ultratech outperformed, and you had the entire mid-cap cement pack which was perking up in trade. So something like Ramco Cement, Shree Cement, followed by India Cement, all of them saw buying interest, though we're yet to see earnings coming by from these companies, but sentiment was pretty positive for the entire space. The other space which worked up in the second half was the sugar pack, Balrampur Chini, that touched its 52-week high in today's session, closing with gains of nearly 3.5%, and also a small cap company like Uttam Sugar, that saw substantial gains. That's closing the day with almost 10.5% gains coming in there. On the losing side, M&M Financial, the numbers looked okay. I think it was the disbursement growth which disappointed the street, as Mayuresh mentioned. That was down almost 4%. Godrej Consumer comes out with its earnings next week, and there was a sudden fall which came in, closing with cuts of 3.5% around the levels of 650. Some of the other stocks like Torrent Pharma and also just something like Jindal Steel and Power, they came under pressure. Torrent closing the day at day's low, marked 3.5% lower, and also something like Jindal Steel and Power. Last half an hour, it saw even more selling pressure coming by 2.6%. And Devina, if you look at the entire April series now, it was volatile. We did see India VIX moving higher, but not much of gains. Bank Nifty is closing the series with cuts of nearly 3%, and Nifty is up only, I guess, 0.5%.
I probably wouldn't even be surprised if we were flat to marginally negative for the series, but we'll actually get the MRR going. But that's how you shut shop for the day for the Nifty Bank, which has been down 1%. So yeah, marginally positive, but 0.6% on the Nifty. Tata Motors auto as a pocket. In fact, if you take a look at the auto index itself for the month of April, it's been really strong. Everything has bounced back from the lows. Tata Motors 30%, and cement on the back of what's happened over the last few days. This is the intraday move of Nifty Auto, but I was talking about the series. But nonetheless, it's been a recovery for the auto space. You've got a Grasim, you've got a Wipro, Bajaj Finserv, a TCS. So you have got IT as a pocket and auto as a pocket, which has done well. What's not done well? Banks. Yes Bank has taken a knock. Bharti Infratel on the back of today's 10% cut. IndusInd Bank too, and Indiabulls Housing Finance. These are the key big losers of the series.
Well, yep, and we did get some support coming in at least today and yesterday from India VIX, but let's see, tomorrow we do start a fresh series, and we will be starting below that mark of 11,700, which we were keenly watching out for. India VIX, I guess, for the day was down by almost 2 to 2.5%. Let's also check how the market breadth looked like, because we started off when there were more of advances, but towards the end that picture changed. As you can see, there were more declines towards the end as opposed to advances.
It's going to be interesting to see how we shaped up on the turnover side. Last few series, we've been seeing a number closer to about 17, 18, and that's exactly what you've got it at.
I think the cash turnover picked up quite substantially today, 44,000 on NSE.
Yeah, so closer to 45,000 on the NSE cash, which is a hefty number. Generally, around 39 to 40 is what we see that. So this has been a decent expiry, but nonetheless, a 0.6% gain on the Nifty, and you've got these kind of numbers in today's session. But that's what we've got for close, and we've got Pritesh still here with us. So let's get in a closing comment from him as to how he would position himself as he enters into the next series come tomorrow. Pritesh.
Now see, as I mentioned earlier, this is a typical range of market. We had a breakout rally in the month of March, and market is going to take its time. And we are also going to build up to the outcome of the election in next few days. So I believe that we are bound to see this kind of volatile moves. But I think the movement is going to be restricted within the band of 300 points. So 11,500 downside and 11,800 upside.
Okay. We'll leave it at that. Pritesh, thanks so very much for joining us this afternoon. Appreciate you taking out the time.
Thank you.
All right, and on that note, it's a wrap on this edition of Countdown from Navneet, Dheeraj and myself. Thank you so very much for watching. The market wrap comes up next.
Better?
Same.
Now? Abhi?
I think so.
Sometimes we can't see what's right in front of us. And when it's clear, then the big picture becomes fuzzy.
Perfect.
The right lens always is.